Hello and welcome to Earth911's Sustainability in Your Ear, the podcast conversation with a changemaker working to accelerate the transition to a sustainable carbon neutral society. I'm your host, Mitch Ratcliffe. Welcome back. Our guest today, Kirat Singh, is CEO and co-founder of Beacon Platform Incorporated, a developer of cloud computing infrastructure for Wall Street and financial institutions. Beacon's system is built in part to reduce the environmental impact of processing large amounts of financial data. Computing is actually expected to consume up to 20% of all electricity generated by 2030. In the era of high-speed trading, banks use massive amounts of power to crunch data that identifies opportunities to profit in the stock market or by loaning money to people. As much as half of a bank's carbon footprint is generated by computing. Information technology, as we've heard in many other conversations on sustainability in your ear, provides the ability to track and analyze our world in order to reduce waste and improve environmental performance. But we need to establish information technology, design, and operational practices that emphasize better environmental outcomes. As more companies shift their computing from private data centers to the cloud, there's also an opportunity to introduce significant efficiencies based not only on how the cloud is powered, whether or not they use renewable energy or not, but also the way computing jobs are managed, the networks used to move data between the cloud and customers, and a lot of other factors. Prior to founding Beacon, Kirat launched large data platforms at Bank of America, Merrill Lynch, JP Morgan, and Goldman Sachs. You can learn more about Beacon Platform Incorporated at www.beacon.io. That's beacon.io. Welcome to the show, Kirat. How are you doing today?
Very good. Thank you very much, Mitch, and really appreciate you having me on your show.
Well, thank you for joining us. It's always interesting to talk about technology. It's something that is a big part of my background. I want to start off with what Beacon does, the basics of what Beacon does, which is, why is the cloud, which is utilized only by about 20% of companies at this point, a more efficient platform than traditional computing, specifically with regard to environmental impact? What's the difference?
Yeah, that is a great question, because you think it's a computer. A computer is a computer, right? It doesn't matter where it is. I started my career at banks for like 17 years, Goldman, JP, Bank of America. And when we started late 90s, I always say computers sucked. They were not as fast as they are now. They were not networked, and they were all underneath your desk. And I think as finance got more and more computational, people started building more and more complex derivatives. You just needed more compute to compute risk. You needed to connect all these computers up. You couldn't do everything on one computer. And people started building big data centers. I remember we had like 10 Linux servers in a closet in 98. But now if you think about it, like, what are those servers doing? They're using power. They're sitting in a closet. And then, you crank up the air conditioning to heat them up, to cool them down. And even if you're not using them, you're still paying for that cooling. You're still paying for that power. And there's all the maintenance and the disposal of all these things. And, I think if you distribute all of that, we don't do it efficiently. Mm-hmm. And so one of the reasons when we started Beacon was we said, if you look at derivatives now, they're all multilateral trades, and that means that everyone has to trade a derivative with somebody else. And the moment you do that, everyone has to do a bit of the same amount of work. And if everyone goes and invents that themselves, it's inefficient, and they're running all that compute themselves. And there's no platform for derivatives to make it easy for people to understand how to change these things, how to manage risk on them, and how to represent them. So that at the core, that's what Beacon is. It's a transparent, open platform that allows you to modify derivatives, create your own, and then run the compute on the cloud. When we started Beacon, we decided to be purely cloud focused because I think the biggest advantage of the cloud is virtualization. Mm-hmm. So Amazon or Azure or GCP will buy, say, 1,000 computers. They'll run virtual machines on them. And if I'm using them, I get a slice. And if I'm not using it, somebody else gets a slice.
Well, and I think this is a very important concept. You've just described something that's a little ironic. We have centralized computing processing on the cloud.
Yes.
and distributed the ability to access it, which is what we've been aiming at for the past 35 years. But that creates this opportunity to use virtualization, a technology that allows one machine, or at least a version of a machine, to run in the place of another at any time so that the resources can be used almost constantly. How does virtualization in particular make this a less environmentally impactful approach to managing data?
Great question. And funnily, I think we've come full circle. In the old days, computers were super expensive and you had a mainframe and you got slices of the mainframe. And then they got cheap enough that everyone had them underneath their desks, and that's less efficient because if you think about a cloud provider, their entire business is the spread between the cost to buy the computer, the power to run it, and how much they can charge for it. So what they're going to do is make that as efficient as possible so they think about how much revenue they can generate or profit they can generate from it. And whatever, like economics is useful for some of these things. And because in this case, that efficiency reduces the environmental impact of using compute. Because they are laser focused on saying, how do I most efficiently cool a data center? How do I run the most power efficient CPUs and components and network and storage? Because if it uses more power, they'll need more cooling. They'll pay more in electricity. And so they can at scale go and make the most power efficient components, whereas as an individual consumer, I don't care about that and I do not have enough leverage to make it more efficient.
So do you find that financial institutions at this point are really focused on efficiency, or is it on the environment? Are they coming to you with aggressive environmental goals and saying we want to lower our consumption or our GHG emissions by this much? Is that conversation actually happening now?
To be very honest, not very much.
Okay.
Most people come to us because they want some things to be cheaper. Mm-hmm. No, I mean, they don't come to us just for things to be cheaper, but one of the driving factors for folks is they think the cloud is more economically efficient for them. And, I think you want to align incentives, right? I care a lot about the environment. Actually, my wife works in the environmental field now. She used to be a trader. But to me, we want to make it easy for people to do the right thing. And the things that we tell folks also is, yes, this is also not only going to be cheaper for you, it also is more environmentally efficient. Because firstly, if you centralize all the computing, you can virtualize it. So if I'm not using a slice of a CPU, somebody else will. And so that means I'm not paying for the unused time, and I'm not actually having an environmental impact for the unused time. And I can also have a much more efficient data center. And like a cloud provider can then have renewable energy commitments because they can forward project how much compute they're going to use, how much power they're going to use, and then they can go sign up for a long-term commitment or set up like a solar farm. And so that's what I keep track of sort of unofficially. Is like for our cloud providers, for the data centers we put compute in, are there solar farms close to them? Like, do they have their renewable energy commitments powering their data centers? And then we can also move compute. So that's a really cool thing as well about cloud.
Right.
You can just move your compute to a more efficient data center.
Well, and of course, increased efficiency is a function of every generation of technology. As we make these components smaller and more compact, you use less energy. It's a natural outcome of progress. But is, at this point, the thinking about how we move beyond the built-in progress to improve the overall management of information to reduce our impact really a critical factor in a lot of IT decision making? And I want to ask a few questions about how your platform integrates green IT principles. Maybe this is the best way to do that. Are you yourself providing environmental impact data to customers about their data center so that they can report that to customers and regulators?
So, we're still fairly small, but so I think we don't have as much impact on that. And we're starting to do that. We're starting to give people like carbon scores or like gray, like we had a little app that we built to tell you, how gray your compute is, because even though the cloud providers have renewable energy commitments, they don't necessarily power their data centers directly with those green energy commitments, if you know.
Right, which is a problem of the infrastructure, and you can do trading of different types of power in order to offset, in so many words,
That's
fossil fuel generated power. But so does that imply that what we're really waiting for is a radical transformation in our energy infrastructure in order to make computing more efficient overall?
I think we can do it faster than that. Just because
Okay.
if you code all your infrastructure, like your compute requirements to cloud APIs, and you're also cloud agnostic. So that's the one thing we cared a lot about, to say we're not going to be specific to a cloud provider. We can run on any cloud provider. And then you could just say, well, I think this data center here is not energy efficient, is not carbon efficient. I'm just going to move to another data center that's right next to a hydropower station, because my code will still run exactly the same. I have exactly the same capabilities, and I can now make that choice. And without having to change anything in my development cycle, right? Because it's very hard. Software is just, is so complex now, making changes is risky. And so you want to take that risk away to encourage people. Sorry, I didn't mean to.
No, that's a really important point. But are we at this point giving coders the tools to make decisions to make their code less environmentally impactful? For instance, the ability to identify a green compute resource and say, send my workload there, rather
Yes.
than.
That's exactly right.
So is the Beacon Platform's integrated development environment offering that kind of capability today, or is that something that you're thinking about adding?
I think we should probably phrase it in those terms. And, it's interesting because, I think it's just really useful to have this conversation, because, I think you want people to feel good about the things they do. And, yes, we can run stuff on data centers, but it's theoretical. But I think if you tell people this is actually good for the environment, it's good for your children, and it's good for. So what we do actually, so some of the things we care about is we'll pick more energy efficient compute to run on. So for example, you could take Intel versus AMD. Some things are more power efficient, run on those ARMs. And we are actually just doing a port of all our infrastructure to ARM, because ARM is a more power efficient architecture, as you've seen, like with the Apple M1 chips and all these other things, system on chips. So we are actually rolling out an ARM based version of Beacon, so that'll use less power. And I always think about, and to me, what I tell clients is using less power, firstly, saves you money, and it's better for the environment, and you can make the right choice. So it's a no-brainer.
Well, and what you're really doing here is you're empowering that background work that makes this more environmentally efficient over time. Have you yourself set greenhouse gas emission goals for Beacon? Are you looking to limit your scope 1, scope 2, and scope 3 emissions by 2030? What are your goals? So,
it's still fairly small, but in terms of greenhouse gas emissions, but actually we think about that on not formally. So, ever since we started Beacon, we always offset our carbon emissions on flights, for example, because I feel like,
okay.
That's a very obvious thing you can do. And all our infrastructure runs on cloud providers. And we, of course, maybe we got lucky too, but we picked the cloud providers. They all have renewable energy goals. So, for example, AWS and Azure by 2025 have committed to 100% renewable energy. Right. And we don't have any other infrastructure. Right? So, in a sense, I'd love to do the GHG standards. It's just, it is quite onerous to figure those out. Yeah.
Well, and that's an interesting opportunity that exists in information technology itself to solve that onerous problem, because we can track everything so much more carefully. But the lack of comparable metrics, the measurements that we use to say this impacts the environment this much, are very much developmental, and it's challenging. I get pitches all the time about carbon calculators, and as far as I can tell, they're all wild ass guesses rather than deeply researched sources. Can Beacon and other financial services technology providers get into this space and create those comparable metrics and start to make them available to all these organizations? Is that a role that potentially a tech firm could lead rather than relying on the banks to do it themselves?
Yeah, I think that is a great point because, if you think, like, as you said, maybe 20% of the compute runs on cloud now, right? So in So what we'd actually love to do is, like, most of our cost and I think environmental impact is really from infrastructure that we run or enable for folks.
Mm-hmm.
And like part of that is we want to be able to provide green energy scores to folks to say, this is how much of your compute is sourced from renewable energy, which we can pull all that data from. And again, I think if you think about virtualization and all these software defined APIs to run compute, that allows you then to actually quantify this and
right.
Rather than having your own data center where you have to manage all the reporting, and it's much easier to rely on a cloud provider to do that, right? Because they have that data.
Now, there's a practice that's emerging in IT called FinOps, or financial operations, and it involves closely tracking cloud resource usage and spending. Is that potentially a platform for introducing a widespread analysis of the environmental impact of computing across all industries, but particularly in banking, because banking is so compute intensive? I mean, they go out, they'll look at 50 million data points 10,000 times a day in order to identify an opportunity to make an extra buck on a trade. And that's the problem, is that we're ingesting more and more data, but we're not necessarily thinking about the efficiency overall of the outcome. Can FinOps be the basis for a new awareness and a new practice that is green?
Absolutely. And, actually, that's something that's, been sort of near and dear to my heart, because I feel like, if you are a trader or you're executing a trade or running risk management, what you really want in your P&L is how much it costs you to run the analysis to do this. And so actually we can enable that, because what we do is we'll say we run all your risk analysis and calculations on compute pools, and we can tag who ran what. Mm-hmm. We can give you back a very precise score of saying, this is how much compute you used, which is how much carbon you used for this thing.
So even within an organization, you could say that team generated this much CO2, that team this much.
Correct. Yeah.
Team A could do better.
Yes.
And you could set up competition within the organization.
That's right. And, you can do a bunch of these things by saying, and it's interesting because when you run compute, a lot of times, like one sort of the curse of having cheap, like easily accessible compute is that you just use more of it. Like, I don't know if you read the stat too, like even energy efficient houses use as much energy as non-energy efficient houses. It's because people will leave lights on if they're like, oh, I have LED bulbs.
Raising a whole moral hazard question. But again, going back to the data, that's where you can hold people accountable for those assumptions that they're making. Hey, I want to take a quick break. We're going to listen to a couple of commercials and we're going to come right back. And I want to talk about next what our listeners should be asking their banks about their financial or their environmental performance. We'll be right back. We're back to continue talking about how to make the information infrastructure more environmentally responsible with Kirat Singh. He is the CEO of Beacon Platforms Incorporated. Kirat, let's turn to a question that I know our listeners ask us. How can they judge the environmental performance of a bank or an insurer, a financial company that they do business with? Are ESG reports, environmental, social, and governance reports, a reliable way to get a sense of how your bank treats the environment?
I think it's a hard question. I think ESG is a great start. Like, I think you need a standard, you need third-party reporting around these things, and I think they're becoming increasingly more sophisticated. And I personally look at it when I make my own financial decisions.
So what do you look at? What are the factors that you would try to identify in an ESG report to state that they're responsible?
At least for financial institutions, the thing that personally I would look at the most is, do they fund fossil fuel projects? I think that in a way is the biggest way we can affect change. And, for example, if you look at this, the Inflation Reduction Act that got passed, which actually, by the way, is a climate bill, is fantastic. The investment in green energy projects has just increased just in the last few weeks. And I think it's amazing because these things are at the stage where they are more efficient, they have better return, they create more jobs. And I think we just need to make sure that we encourage our financial institutions to invest in these rather than investing in fossil fuel projects.
So that also implies that a lot of the effort that we're talking about on the IT side is fairly minor compared to the financial decisions they make using that technology.
Yes, but I think so. But most places, like some of my information is a bit old, but like big banks, pretty much a quarter of their tech spend is infrastructure.
Yeah.
And that's a lot.
Right. But a quarter of their tech spend is still a fraction of the amount of money going into, for instance, financing a fossil fuel project.
Oh, no. That is absolutely right. In terms of the returns that folks have. So, right. I to be honest, I don't know too much about this space. So like, it's hard for me to comment too, right? But I think having ESG on, like, in terms of your investment portfolio, I think is really interesting, right? Because you want to know,
right,
like, from, just as a personal individual, like I like to know how much of my investment results were through ESG positive contributions, in a sense, right? And you want to maximize that. You want to make that as large as possible.
Right.
I think that's a good way for us all to have a positive impact.
So how do you see the reporting environment changing over the course of the next few years? You're looking ahead at what your technology can do. How do you expect ESG reporting will change? Will it be a lot more granular in the future? Will we have more information to make a good decision on?
Yeah, I think it has to get more granular, firstly, at a reporting level. But I think we need more analysis on that to be able to present to people in an easily digestible form. Because is
that better metaphors then? Is it better metaphors for what the data says that we need, rather than just being able to say, here's what the data says?
I think that's exactly right. And, I think about this in terms of risk management, because, that's what you do in finance is like, okay, here is a variable that changes, and what's the impact to, some benchmark that I'm tracking. So arguably, if these things get better, the metric should be, here is sort of a climate risk benchmark. Mm-hmm. And here is some ESG variable, and how does that impact it, right? And if I have no ESG input, this thing goes up, because that's like, CO2 emissions. And to me, that's something that people should want to track, right, in their personal portfolios. Like, are they increasing climate risk, or are they decreasing climate risk?
Now, one of the movements in the financial industry is the U.S. Climate Finance Working Group, and this is the consortium of financial trade associations, and they're urging people to adopt better principles for lowering the industry's environmental impact. But one of the things they called out in a recent report is that without a price on carbon, it's really difficult for any organization to make these trade-offs in an efficient way. Do we need to put a price on carbon in order to kickstart the real transformation of this entire industry away from both fossil fuels and more efficient technology?
Yeah, that's a really hard question. Like, on the surface, it seems completely obvious. There should be a price on carbon. But what is that price, and who pays it?
Well, the Biden administration says it's about $50, $52 a ton.
Yeah.
A report that came out in Nature just last week says that the actual cost to society of a ton of CO2 in the future is $185. And you can pay to sequester carbon by the ton, but we don't have, like we would in currency trading, a baseline against which we can make those trades efficiently. We have to go look for them. And again, this is possibly an opportunity for an organization like Beacon to begin to express those opportunities to profit by selling or buying carbon.
That's right. And I think there have been many sort of emissions trading and cap and trade and all these things over the years, right? And I think the problem is, I think it's a global. You can't do these in a vacuum, right? I think it has to be a global effort, and everyone has to agree on a price, because otherwise there's too much volatility, right? And
yeah.
All these markets get partitioned, right? So I kind of think the best way to think about it is that if people can track how much carbon they generate or they use, and you report that at least is a good proxy then to force folks to then define what that price on carbon is, or at least manage it down. Because I think it's going to take a long time for us to have a consistent price and trading market around carbon, right?
Well, what does a long time look like in your thinking? Where are we going to be in 2030 with regard to the financial system's environmental impact? Will we be measuring it completely? Will we be at net zero? Will we have a price on carbon? What is your vision for the industry as you build the infrastructure it runs on?
We build derivatives infrastructure, and I think just as you pointed out too, right? Like our impact on carbon is much less than the investment that folks do to finance carbon. So I think the best we can do, which I think about, is like reducing folks' carbon consumption, right? In a sense, of making sure that they use renewable energy, and then also allowing them to express the risk from carbon emissions. And that's not something we can influence directly, by the way. Yeah.
But you can choose technologies that contribute to improved transparency about those costs. So Let me ask a couple of meta questions here. Do things like decentralized finance, or DeFi, which is built on cryptocurrency and blockchain, represent an opportunity to radically improve that transparency, or does all the compute power associated with making that happen offset any benefits?
That is a very hard question. I don't think so yet. Like, okay. If you look at Bitcoin, if you look, for example, of course, Bitcoin is in DeFi, right? But just in terms of crypto, like the energy consumption of Bitcoin, like Oxford had a report, it's about 16 gigawatt hours.
Yeah, which is about as much as Belgium uses in a year.
Yeah, that's right. And so it's very hard to say if that's the right thing for us to be, as a human race, right, to be just doing, because.
But we are minting billionaires in that space. Are those billionaires going to contribute to a better world, or are they just taking more and heading to Puerto Rico to live with their friends in the crypto community?
Yeah, that, it's that I don't know. But I do, like, if you look at DeFi, I think the interesting thing about it is like transparency. Mm-hmm. But I don't know if it's more efficient, by the way. And it's because it's interesting, because if you think about having distributed compute like we had in the past, less efficient than having cloud data centers.
Sure.
I think there's a whole bunch of interesting DeFi blockchain principles that improve transparency. But I really think having like sort of trusted third parties and having more transparency on the data that financial institutions own, where you can use crypto and blockchain technologies, is fundamentally going to be the right way to go, right? Because if you have a whole distributed infrastructure, I think it's very hard to control, right? It's easy to fork those things. They're like, who runs the compute infrastructure for that, right? I don't have a plan. Yeah, very hard to say.
Well, but this also, it points to a couple of interesting opportunities. One is setting standards around how we share this information. Are there projects that you see emerging around environmental data standards that we should be following?
Again, apologies. I don't think I have much
Okay.
Like I just follow some of the ESG stuff, so I don't know very much about that. But I think there are interesting things, like if you look at exchanges that are attempting to tokenize carbon and trading that, I think those are super interesting, by the way, because like what I think crypto blockchain technologies can help with is if you want to trade a new product, very hard to construct a new product to trade. And if you can, for example, tokenize carbon emissions, and like you could even take like Ethereum, for example, where you can construct new financial contracts. Right. And ideally, if Ethereum was using proof of stake rather than proof of work, then it's a much more computationally intensive platform. So I love that approach, by the way, because then there's transparency on the chain. You can construct these products and you can actually trade carbon. You can tokenize it. Every company could sell essentially its carbon emissions as a token that you could trade. But you want to use a much more efficient technology, right, or a protocol rather than proof of work.
Do you see anything like that emerging at this point, or is something like Ethereum's potential rise? It isn't proven yet, but Ethereum being a more efficient process for making transactions than Bitcoin currently supports, do those naturally reduce the environmental overhead of blockchain and DeFi strategies? Or is this really we're just sucking in more data and using these resources because they're cheap? And I think I might be oversimplifying that question, but it really kind of brings it down to where we are right now, which is the choice between consciously deciding to be environmentally efficient and simply pursuing more profit.
Great question. Like, yeah, I think people are using this because they're too cheap, right? There's no price on carbon, and and Ethereum, I think, is very interesting, but it still does not use proof of stake.
Right.
So I think it has the potential to do that, and actually, that's what I would love to see. And I think ideally, that's what would really change the ecosystem here. If we had very large crypto or blockchain that was proof of stake, not proof of work.
Well, Kirat, this has been a fascinating conversation. I want to thank you for spending time with us today. How can folks follow along with Beacon, and in particular, if they're interested in understanding what their banks do, where should they start on your site to begin to assess technology's impact on their life?
Thank you, and likewise, fantastic speaking with you, and again, thank you for having me on the show. We have folks who post stuff on LinkedIn. We're always posting blogs on LinkedIn. Okay. And on our website, of course. But I think that's about it, really. We don't do too much marketing.
Well, we'll keep track. We'll include a link in the article that goes with the podcast. Thank you very much for spending time with us today.
Thank you, Mitch. Really appreciate it.
We've been speaking with Kirat Singh, who's the CEO and co-founder of Beacon Platform Incorporated. You can learn more about Beacon at www.beacon.io. What we heard again is that, like many things, information technology, computing, is a double-edged sword. It comes with a high environmental price, one that we can certainly reduce through greater efficiency. But it also creates an immense amount of activity that has been good economically for everyone, often to the expense of the planet. And what we have to do is drive awareness of our impact. And we don't have the measurements yet to do that in computing across the board. And we need to develop those metrics, those key performance indicators for those business people out there who love a good acronym, that define our accountability for the impact we have on the environment. And we have to build human stories, metaphors that express that, so that we can talk with one another easily and conveniently, not about specific percentages of impact, but about our overall responsibility for the environment and our relationship to it. So, as with cryptocurrency, where people have rushed in to make a profit, and then started to talk about the environmental impact of those profits, we need to rethink the way we go about beginning to make profits and redesign the economy for that cradle to cradle full life cycle experience that allows all of us to have a meaningful relationship with nature. It isn't other, we're part of it. And we have really literally lifted ourselves out of it and tried to stand apart. And that's why we're in the pickle we're in today. Well, there's going to be a lot to talk about for a long time. This is Mitch Ratcliffe. I'm your host at Sustainability in Your Ear, the Earth911 podcast. And I hope you'll take a few minutes to share this show and all the others that we've done with your friends, family, your coworkers. Talk to your boss about the impact that the company is having on the environment when you do banking. You heard it plenty here today to begin that conversation. We're going to be back soon with another innovator interview. In the meantime, folks, take care of yourself, take care of one another, and let's all take care of this beautiful planet of ours. Have a green day.